Global trade is one of the most dynamic areas of economics and business. Companies operating across borders face unique challenges when it comes to pricing their products. Unlike domestic markets, international trade requires businesses to consider exchange rates, tariffs, competition, cultural differences, and government regulations. An effective pricing strategy in global trade can determine whether a company succeeds or fails in international markets. 1. Cost-based pricing. This is the most straightforward approach, where businesses set prices based on the total cost of production, plus a profit margin. In global trade, however, companies must also account for shipping and logistics costs, tariffs and customs duties, insurance and compliance costs. While cost-based pricing ensures profitability, it may not always be competitive in price-sensitive markets. 2. Market-oriented pricing. Here, companies analyze demand and competitor prices in the target market before deciding their own. For instance, a product may sell at a higher price in developed markets like Europe or the US due to higher purchasing power, while the same product may need to be priced lower in emerging markets to remain attractive. 3. Penetration pricing. Penetration pricing involves setting a low price initially to enter a new market quickly and attract customers. This strategy is common for consumer goods and technology products. Once the product gains acceptance and brand recognition, prices are gradually increased. While effective, it carries the risk of low short-term profits. 4. Skimming pricing. In contrast to penetration pricing, price skimming sets high initial prices to maximize profits from early adopters, often in industries like electronics or pharmaceuticals. Over time, prices are reduced to attract more price-sensitive customers. This approach works best when products are innovative and have limited competition. 5. Value-based pricing. Customer satisfaction surveys, perceived value assessments, premium pricing strategy documents. This strategy focuses on how much customers in the target market are willing to pay based on the perceived value of the product. Focus groups discussing product value, customer testimonials, value perception studies, luxury goods, branded clothing, and premium electronics often use this method. High-end fashion boutiques, luxury car showrooms, premium electronics displays. It requires strong branding, marketing, and consumer trust to succeed globally. Brand-building campaigns, international marketing materials, consumer trust metrics, global brand recognition. 6. Dynamic pricing e-commerce platforms, online shopping interfaces, digital price displays. With the rise of e-commerce, dynamic pricing has become increasingly important. Prices change in real time depending on demand, competition, or even currency fluctuations. Computer screens showing real-time price adjustments, algorithmic pricing systems, currency exchange rate monitors. Airlines, hotels, and online retailers frequently use this approach in international trade. Airport departure boards with changing prices, hotel booking websites, online retail platforms with dynamic pricing. 7. Transfer pricing in multinationals. For multinational corporations, transfer pricing is critical. It involves setting prices for goods and services exchanged between subsidiaries in different countries. This must comply with international tax laws and regulations to avoid accusations of profit shifting or tax evasion. Key factors influencing pricing in global trade. 1. Exchange rate volatility. Currency fluctuations can impact profitability. 2. Trade policies. Tariffs, quotas, and sanctions directly affect pricing flexibility. 3. Local competition. Domestic rivals may offer cheaper alternatives. 4. Cultural preferences. What is considered premium in one country may not be valued the same elsewhere. 5. Economic conditions. Inflation, unemployment, and purchasing power determine consumer willingness to pay. Conclusion. Pricing strategies in global trade are far more complex than domestic pricing. Businesses must strike a balance between profitability, competitiveness, and compliance with international regulations. Successful global companies are those that adapt their pricing models to local conditions while maintaining a consistent overall strategy. In an interconnected world, the right pricing approach can help businesses expand internationally, strengthen their brand, and secure long-term growth in global markets.